Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in and take a look, see what's going on today. If you want to follow me, it's @_finance. And if you want to join our community, finding-value.com, where I dive deeper into all this stuff, looking for investment opportunities and sharing all that information with everyone in the community. Starting with Meb Faber. What do we have here? The S&P 500 versus the MSCI, EAFE, Outperformance, and DXY index. You guys have heard me talk about dollar strength, dollar weakness, and how there'd be a rotation from dollar denominated assets to emerging markets or other non-dollar denominated assets. Well, this is the actual data. This is the proof of what I am saying. So DXY cumulative performance across periods. The S&P 500 outperformance as the dollar gets stronger. So as the dollar strengthens, we see outperformance of the S&P 500. If we see the dollar, for the most part, weaken. So we had a weakening here. It still strengthened and then it weakened. So there's some front running to some degree in the markets a little bit. You can see it's just a little bit where that cursor is. But for the most part, weaker dollar, stronger MSCI, EAFE. And then we've got stronger S&P when the dollar is strong. And you can see that going back and forth. What I think could occur, and you can see just over here on the right-hand side, see that little blip that started? It says EAFE outperforms 16%, DXY falls 8%. So we're seeing outperformance, and maybe this is the beginning of a new regime where internationals outperform below the zero line. Is this going to be when money rotates away from dollar denominated assets? Are we going to get a weaker dollar? Yada, yada, yada. My answer is yes. I think that's going to be the case. So how can I make that call? What am I using to make that call? Is it just my opinion? Am I making this up? No. What I'm using, and I can yank it up here real quick. Oops. What I'm using for that decision are the currencies priced against each other. So if I were to use like the Canadian USD, the last time we had that kind of big bull market is when they break out. That's what I think is going to occur coming up here in the future. So this is going to break out of this falling wedge and move. So it's not me making it up. There's a bunch of evidence that backs my opinion of why I think this is going to outperform. Right now, you could have a very good entry point, and ride a very big bull market. This was the 2001-ish all the way to 2011 bull market for international and gold and a bunch of different commodities. I think that's coming. And this is further evidence of that it's coming, is that we see this ratio start to outperform for internationals. I mean, everything should be in alignment here, guys. When the markets move, a lot of it's driven by currency exchange rates. You probably heard me say that before. And currency exchange rates dictates money flows. Or better, money flows dictate currency exchange rates to some degree too. But it's all part of the conditions that the herd is being subjected to. Tim Denning says, money is a scoreboard. If you don't have enough, it's a sign you're not living in alignment with your true self and obsession. The answer is to get angry at the world or get frustrated and give up. The answer is just to figure out how to make more money. It's easier than you think once you move past the anger stage and onto the solution. I don't know if I would agree 100% with this. Money is a scoreboard. If you don't have enough, it's a sign you're not living in alignment with your true self and obsession. Oh no, I don't know if I agree with this. And I like sharing stuff that's money related. I don't think money's a scoreboard. I think money is a tool. It's a tool. It's not a scoreboard. If you make more money or you make less money, I don't think that really matters. And not having enough money, that's just an opinion. It's about, I don't know how to state this, but money is a tool to get what you want in life. And when I think of money as a scoreboard, I think of like money as a way to show things off. A lot of people, like if you play sports and you win the game, you point to the scoreboard saying, "Look at the scoreboard, I win." Um, Money isn't necessarily proving that you're better in life, that you win in life. Money is just a tool. You can have lots of money and be unhappy. You can have lots of money and not really do anything with your life. Um, so I don't think money is a good tool or a good use or a good measuring stick of winning or not. I think money is just a tool to get you from A to B of what you want in life. That's all it is. Uh, if somebody wants a really nice car, who gives a crap? Is that a scoreboard that they're trying to necessarily show off? Maybe. I mean, a lot of people want to show things off. They want to feel like they're important. And I mean, that's great and all, but I don't know. It doesn't matter to me. So, money is a tool to get what you want out of life. Money is not a scoreboard, in my opinion. So, a lot of these guys trying to say whatever, I mean, be real careful with your word choice. But yeah, I don't know if I believe in that. He says working a boring career is wasting your life. Being lukewarm passionate is wasting your life. Not taking risks is wasting your life. Never having enough money is wasting your life. Avoiding hard things is wasting your life. I mean, there's a lot of opinions in there. I will say that. Working a boring career at some point in your life, that's maybe how you springboard yourself into existence. You may have to start somewhere where you don't want to start. Being lukewarm passionate is wasting your life. You know, this is very easy to say if you have a lot of things to fall back on. And I don't know if he does or doesn't, but usually when you're young, you don't know what you want to do in your life. I sure didn't. I still think a lot of people, even when they're older, still don't know exactly what they want. But if you're really young and you don't have a ton of skills and you don't really know which path or direction you want to go, I mean, you can have a boring job, aka career, and you're not wasting your life. You're trying to figure out what you want to do. And you may have to work in a couple of different areas to get exposed to what might be something that you want to do. So, I mean, if you're exposed to nothing, then you don't know anything. But if you have to work a bunch of boring jobs to get where you want to go, that's just the way it is. I don't know of any other way to do it. Are you going to never work and then just all of a sudden go into some awesome job that's just sitting there? I don't think so. I don't think that's how most people do it. Most people kind of work in some job just to get used to, making money and seeing what a job is like. And then you just have to keep going to see where you're passionate about. But I don't know if everyone's going to have passion in the job that they have. Um, so I don't know if what he's saying is necessarily 100% true. And then never having enough money is wasting your life. I don't know what that means either. There are people where there's no amount of money that they could make would be enough. Enough is a term that is very subjective. I'm pretty content with where I'm at. I don't have a nice car that I drive on a daily basis. I've got a second and third car for fun that I didn't spend a lot of money on. Um, I probably spend I've probably spent less money on all my cars than what most people buy when they buy one new car. And that's all the cars I've ever owned in my entire life. You could probably add up all the money that I've spent in stuff that I own, and it's probably less than what most people have spent in a single year. I mean, think about that. And The key to happiness is to wanting less, to not want the stupid crap. And it keeps your mind kind of free and clear of just garbage. I view things where people pack stuff around them. You got these people with like, they're like pack rats. That's like a problem. Like their brain isn't well ironed out. Um, if you're like a hoarder or something like that. I mean, when I go on walks and I walk around, I look in people's garages because it's open and you just see it. There are so many people that have entire like half of their garage or more is filled with boxes of crap. And I'm just thinking like what the heck is in those boxes that they have that's just filled with garbage. And then they buy a brand new car and they let it sit outside. And here the sun is pretty intense. You're going to basically ruin the car either through hail damage or through the sun because the sun is very intense. So you get your paint to get all faded out, your interior fades out, and all that. So I kind of like sit there and I think, okay, so these guys buy a brand new car, they let it sit in the sun, get all nasty, and then they just keep like a couple $1,000s worth of crap sitting in their garage. That makes absolutely no sense to me. But that's what I observe. Jeff says, green ink everywhere. Get bulled up on stocks. The University of Michigan sentiment survey has hit a cycle low and bounced higher for two consecutive reports. Just like 75, 80, 91, 2009, 2011, and 2022, the S&P 500 loves to splash green ink after such occurrences. And here we're really low. See all these low areas? This is a good time to buy, not to sell. I also think that commodities could outperform here. I think we could see a big commodity boom. And the stock market could go higher too. I'm not saying it can't. I'm in the camp that the stocks, eventually, if interest rates continue to go up, I do think they're going to face a headwind. I don't know when, but I think it could be at any point out in the future if rates continue higher. But commodities, I mean, they're cheap. That's where I'd rather be. And right now, sentiment looks good and it's bouncing higher, which is good. Calvin's been posting more stuff online. He says, new on the blog, physical platinum leasing rates have gone to outer space. So far, out of historical norms, that there is no precedent. The market is blowing up. What it might mean and what comes next. And this is just an excerpt from it. He says, again, it's very important to know who is actually blowing up. And I don't have that data. It could be bad if it's the end users, but let's say it's the intermediaries between the miners and the end users that are short, i.e., the banks, the warehouses, and the dealers. Well, that would mean that they borrowed inventory and sold it. If that's the case, we may be at just the beginning of a much higher platinum pricing. As I pointed out many times, for much of history, platinum was more expensive than gold. It's 30 times more rare, and unlike gold, which mainly flows from one hole in the ground to another, we actually use more of the platinum every year in industrial applications than we pull out of the holes in the ground. In the short term, a dollar spike or liquidity crisis could derail the platinum rally. And again, knowing how much legs this has requires knowing more about the market structure. From a fundamental perspective, the stunning drop in above ground inventories is set to continue. And despite what has been weak demand growth, supply losses have been even greater. So, yeah, platinum looks fantastic. It's got a very good fundamental setup. The ratios, it's all cheap. Everything looks really good. Now, what do we have to do? In my opinion, you do nothing. I've already purchased it, purchased a whole bunch. And you just sit and you watch. You watch people post about it. You watch all these people who say that platinum was so amazing. Then you just sit and do nothing. And you wait for the price to go up. And then we'll see if there's a big squeeze. If this lease rate is a big problem, or indications of a big problem, well, then we're sitting on the right side. I bought it at the right time, and we bought it. If you're part of the website, we bought it underneath the cost curves with the ratios all pointing where platinum is cheap. And historically, whenever you get a setup that is similar to what we just had, you get a massive outperformance in that metal. Gold was like that in 99. Silver was like that in 99, 2000. They were both cheap, in fact. Palladium was like that in 05, 09. Rhodium was like that in 2016. And platinum was like that in 22, 23, 24, 25. And now we're heading higher in 25. Um, so this is what irks me, guys. I hate this, but it's completely right. He says they print more money causing inflation, so you have to invest in assets. Then put a capital gains tax on those assets so you can never escape inflation. Yeah, that's the game. That's what's really bad. And you know what's even crazier? Are you really making purchasing power increases? It's tough. The S&P 500, I mean, if you try trading short term, I mean, you gotta really outperform. And if you're in and get the average of say like a 9 or 10% return in the S&P 500, what is the actual inflation rate? Because if the actual inflation rate is like 8 or 9%, and after you pay taxes, taking it out of 15, you haven't really made that much purchasing power gains. They steal it all, and they steal it through this mechanism that he just wrote here. They steal it through money printing, and then when you try to protect yourself from that money printing, they get you on the back end through taxes. But you didn't really make a purchasing power gain. So what exactly are they gaining? They're just gaining the large chunk of inflation that's in those asset price appreciation. You can't really escape it. It's such a dirty trick. I hate it. I absolutely hate it. Against all odds, it says why the 1970s are the blueprint for what's next. Stagflation isn't theory anymore, it's price action. Rising yields, sticky inflation, global commodity strength, and policy paralysis. We've seen this before. Nick Silver, so Silver Squeeze. We've got $400 silver price target this decade. Much higher fractal equals much higher silver price, 400 plus. And he's talking about the fractal of the big cup and handle, the potential breakout pattern, and then you can project that on top of the pattern there. So yeah, it's a great setup. The driver, interest rates. The driver, a weaker dollar. And what do we look at all the way up here? So if you listen and you piece things together quite well, this is evidence for what I think is going to be a big bull market in silver. You could see back here, there were three distinct waves. Remember those waves that people talk about, inflationary waves, wave one, wave two, wave three. There we are. Well, the wave three is not as big over here. Oh, it's the wave one's actually over here, sorry. Now, this was the other bull market that occurred in 2000s. This one was in the 80s. We had a commodity boom in the 80s as well. And now we're just starting another commodity boom. Silver is part of those commodities, and that is more data or information that aligns with silver doing what it's doing. Another one from Calvin, he says, watching the metals leasing markets blowing up is hilarious. There are going to be bodies, but this is what you get when you financialize everything. These were buy now, pay later schemes for commodity end users that pushed price suppression onto the futures markets. Yeah, this is going to get real interesting here. I don't know what's going to happen. I really don't. It doesn't even matter, guys. You just sit, you wait, and you watch this stuff. If it blows up, that's fine. I'm in it. I'm partaking in it. If it doesn't blow up, I think we're still going higher. So either way, I just like watching this stuff. It's just fun. Investment wisdom in allocating capital, activity does not correlate with achievement. Indeed, in the fields of investment and acquisitions, frenetic behavior is often counterproductive. Here's another one from Calvin. He says, here's an interesting stat. 50% of PGM mines have a basket break-even cost higher than $1,500 an ounce. With platinum and palladium both below $1,500 an ounce, we have more room to run from a fundamental perspective before significant new supply becomes economic. Mine output was minus 6% in 2025. There you go. There's your break evens, at least in his opinion. I was looking at break evens around like 1,200, 1,300, but it really depends on what you use. You know, what high cost producer are you using? 1,500 might be to bring on new supply, yeah. And then the break even for some of the existing producers could be 11, 1,200 bucks for the high cost stuff. Howard Marks says, in the long run, investing is about value and the expectation that eventually price will catch up. But in the short run, it's all about psychology, emotion, and popularity. In the short run, it's capital flows that have the most profound impact of all. And that's what everyone's trying to gauge are these short run movements, which is more psychology, emotion, and popularity. It's more sentiment. I think if you can tie psychology, emotion, and popularity to buying things that are undervalued, that is the best approach in the market that there is. That's the game you want to play. You don't want to play the game, oh, I'm a short-term trader. You want to play the game that gives you the most advantage and the highest probability of success. Then you want to know what that game is and play that game well. What you're doing is you're taking advantage of the people in the short run through their inabilities to handle their own emotion and psychology and how popular things are or unpopular. So the stuff I buy is unpopular, and emotionally, people don't want to be there. And they get scared. Oh no, it's going to go down. Oh no, we're going to have a recession. And then you buy shares off of them. Or no one's there to buy them from, so there's just no demand. Charlie says it's waiting that helps you as an investor, and a lot of people just can't stand to wait. If you didn't get the deferred gratification gene, you've got to work very hard to overcome that. And that's what I'm using to basically arbitrage the market. It's me waiting and them being impatient. Sam Gatling, strong shipping rates are the canary in the coal mine for broad commodity strength. BDRY looks ready to scream higher. I wonder where he got this Kardashian bottom. I call that the booty bottom. We get a booty, and he's got the Kardashian bottom here. Year-to-date high there. SBSW over $20 over the next 18 months. Yeah, we bought that bottom. We bought that Kardashian bottom. Faber says, Mark Faber says, platinum will go from 1,400 to over 3,000 in 18 months, in his opinion. Well, let's keep going. Let's see what happens. Rhodium, the white metal is flirting with a massive breakout. That will make rhodium surge 100% initially. So he thinks big breakout here when you break through these resistance lines is about to happen in rhodium. And that's when the platinum group metal miners are really they're gonna surge on all this. Platinum, nobody is late. The bull era has not even started yet. So there it is. It's coming on up. It says the party starts here when you break this more horizontal trend line. Yeah, that could be the case. But that's when platinum outperforms for years. We saw that in early 2000s, all the way up to the peak here in 2011. And that's when platinum outperforms the stock market. And that's when you want to swap back into stocks up here. Now, I don't wait for the breaks. I buy as low as I can get. So I was buying all through here. Now, this ratio does not necessarily mean that platinum is going down. It's relative. So for the most part, it just means that it's going down against that other asset. I would buy physical platinum in this general area all through here because you don't know exactly where the bottom is. But if you're below the entire move of the previous one and you're below the cost curves and you've got cheap ratios, then you have everything in alignment to just say, you know what, it's go time, in my opinion. I don't wait for breakouts. So when this gets up here, it's probably going to basically have doubled from where I purchased it. It might be hard to get physical metals at that point too. Prices could be a lot higher, premiums could be a lot higher, and If you're buying the physical metal, it's the total cost of acquisition. It's your futures pricing and your premium that you're paying for the physical metal. So if things get super tight in the physical world, I don't know what it looks like over here. What if the platinum price is 2,000, but the physical price is 3,000? Because they've got all these different premiums and lease rates and all this crap that blows up in the physical market. Who knows? So I'm in. I got my choice. I got all the good stuff. I'm good. I am good. Tim Hack, Peter, please. Oh, so I saw that one. So that's what I did last time. So that's where I'll end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Um, Specials, coupon code if you'd like to join. And that's all I've got for today. So we'll catch you next time. This is Finding Value.